In this video, I want to address progressive taxation and marginal tax rates. Recently, Alexandria Ocasio-Cortez has suggested imposing a 70% top marginal tax rate on income over $10 million a year. There's been a lot of critical reactions from the far right, and I think that the critics don't really understand how marginal tax rates work, and they also don't understand the rationale behind progressive taxation. First, let's look at how marginal tax rates work. A marginal tax rate is a rate of taxes on income above a specified point. So, if there is a 70% marginal tax rate set at $10 million, as Ocasio-Cortez has proposed, and you happen to earn $10,001 this year, your income tax bill is not going to be a ridiculous $70,000.70. Your tax increase under Ocasio-Cortez's bill, if you make $10,001 this year, is only going to be 70 cents. That's your tax increase, 70 cents. And this is because the tax increase only applies to annual income above $10 million a year. The income tax system in America is designed so that you never end up being punished for making more money. As you make more money, you get bumped into higher tax brackets. That's true. However, the higher tax bracket only applies to your marginal income, which is to say, it only applies to your income above a specified point. At no point will an increase in income result in a decrease in real income after taxes. An increase in income may put you in a higher tax bracket, but since the higher rate only applies to income above a certain point, no increase in income will ever result in you actually making less money than you did before. The American progressive income tax system, it doesn't tax the wealthy at a ridiculous rate, people at Fox News who tell you that it does are just lying to you. Let's look at the income tax system in America. And I'm just going to round these numbers for the sake of convenience. If you earn up to $10,000 per year, then your tax rate is 10%. If you earn between $10,000 and $40,000 per year, then your tax rate is 10% on the first $10,000, and then it is 12% on what you make above that point. And this is how progressive taxation works. A person making $200,000 per year ends up paying 10% on the first $10,000 that they make, 12% on the next $30,000 that they make, 20% on the next $40,000, 24% on the next $80,000 that they make in the year, and 32% on the next $40,000 after that. It doesn't work like people assume. And the other thing to consider is that a person earning $200,000 a year can also claim deductions. And on average, the deductions for a person earning $200,000 a year, on average, it reduces their taxes by about $18,300. The progressive tax system is not as ridiculous as people on the far right make it out to be. Most Americans just don't understand how it works. Most Americans assume that if you earn $200,000 a year, then your tax rate is going to be $34,000 because, or that's what you're going to owe to the IRS because you're in that 32% tax bracket. And that's not how it works. You only owe that 32% on the income you make above the $200,000 per year. Your actual tax rate is going to be more like a third of what most conservatives would suggest that it would be. Given that high marginal tax rates isn't as ridiculous, and the progressive tax system isn't as ridiculous as people on the right are making it out to be, given that fact, what is the point of progressive marginal tax rates if it's not ridiculous to the point of confiscating all the wealth from people that earn more money? What's its purpose? Historically, the purpose of progressive marginal tax rates was to ensure that wages increased as productivity increased and the economy grew. By imposing an extremely high marginal tax rate on the highest income earners, it encourages employers to pay their employees more as profits increase, rather than pocketing the increased profits. With a high marginal tax rate, wealth increases for all workers as GDP grows. Wages grow with GDP under a system of progressive taxation with high marginal tax rates on top income earners. It ensures that economic growth raises all of society together rather than allowing the rich to get richer at the expense of the rest of society. If workers are more productive and increase profits for their employers, then their wages ought to increase as a result. And a high marginal tax rate on upper income brackets is designed to ensure that that is what happens. So what happens under a free market system without a highly progressive tax system and without this high marginal tax rate on upper income brackets? The profit motive under pure free market capitalism encourages employers to pay the lowest possible wage they can, and also to spend the least amount possible on safety measures, and to spend the least amount possible on benefits for their employees. This results in the impoverishment of the working class, or as Marx called it, the immiseration of the proletariat. Now, advocates of the free market, or advocates of the market system, I should say, realized that this immiseration or impoverishment of the working class could easily be prevented by implementing a progressive tax system. By imposing a progressive tax system, like the one adopted in the Nordic countries, in England, in Germany, and in the United States, you can ensure that the working class increases in prosperity as the economy grows. As corporate profits increase, so will wages in general. This is one of the primary reasons that Karl Marx's predictions in the Communist Manifesto didn't actually pan out historically. Every industrialized country has adopted a system of progressive taxation, and this has prevented the immiseration of the proletariat to a large extent. So, as a consequence of this, the predictions of the Communist Manifesto all turned out to be wrong. Market systems actually ended up raising the whole populace rather than just raising the people at the top and impoverishing the masses. So, I heard someone argue that high marginal tax rates just don't work because statistics show that when we did have a really high marginal tax rate on top brackets in the United States, nobody actually paid them. Well, this is kind of a dumb argument, and it sort of portrays an ignorance of the purpose of high marginal tax rates. The purpose of a high marginal tax rate on the highest income earners is specifically to encourage those people to avoid having to pay the tax. A high marginal tax rate increases the marginal utility of paying your workers more relative to the marginal utility of lining your own pockets as a CEO. This is the whole point. You are supposed to avoid paying the tax. And the way that you avoid paying this tax is by spending the money on wage increases instead. If statistics had shown that many people actually just paid the higher tax rate, then that would prove that the high marginal tax rates weren't working. Another person objected that the correlation between high marginal tax rates and wages does not prove causation. As evidence, they cited the fact that Switzerland has extremely low marginal tax rates on higher income, but still had extremely high wages. This, they argued, proves that high marginal tax rates aren't necessary for increasing wages. Switzerland does have high wages in spite of having a lower marginal tax rate on higher incomes. But this is only because Switzerland has an extremely high minimum wage. It is illegal to pay anybody less than the equivalent of $25 an hour in Switzerland. So, of course they have high wages. It's illegal to offer low wages. Having a high marginal tax rate on upper incomes isn't the only way to ensure that there are high wages. It's just the best way. Now, let's talk about this American system of progressive taxation with high marginal tax rates on top earners and how it worked historically, and then how the system has been broken. So, in the 1920s and the 1950s, the economy was booming. The whole populace in America seemed to be rising up and becoming more prosperous. In 1916, the top tax rate was just 15%. But that was raised to 77% in 1918. The result was the booming 20s. Wages rose throughout the economy. Since workers are consumers, the higher wages for the workers meant more spending for consumers. This stimulated the economy and sparked unprecedented growth. In the latter half of the 1920s, however, the government cut the tax rate for the highest earners down to 25%. And this was a contributing factor in the disaster of the 1930s with the Great Depression. The Great Depression dragged on as long as taxes on the wealthy remained low, and wages consequently remained low. World War II pulled the United States out of the Great Depression, not because war is inherently good for the economy as Keynesians suggest, but because it induced the government to increase the top tax bracket, or increase the top tax rate. When the United States began preparing for war in the late 1930s and entered the war in 1941, it had to raise the top marginal tax rate in order to fund the war efforts. By 1944, they had raised the top tax rate to 94%. It is true that government spending for war creates jobs, and that this government spending helped to stimulate the economy to some extent. But it was the increase in tax rates that led to rising wages for the working class and allowed the economy in general to recover so that the 1950s could be the booming 1950s. The prosperity and economic success of the United States in the 1950s was a direct result of the fact that in 1944 the government raised the top marginal tax rate to 94%. That high tax rate is what made the economy great in the 1950s. The war and government spending only helped the situation insofar as they affected a redistribution of wealth downwards, which has a tendency to counteract that immiseration effect that I talked about before. Rising wages is what made the economy prosper, and the rising wages were directly related to the increased government spending and the increased marginal tax rates that funded that expenditure. So this idea of progressive taxation is by no means new, and it's also by no means radical. Adam Smith, the father of free market economics, as well as Thomas Jefferson, the author of the Declaration of Independence, both advocated progressive taxation. Adam Smith writes, and I quote, "The subjects of every state ought to contribute towards the support of the government as nearly as possible in proportion to their respective abilities." End quote. Now, no, he does not say just in proportion to their incomes, but he says in proportion to their respective abilities. There's another quote here from Adam Smith. "A tax upon house rents would in general fall heaviest upon the rich, and in this sort of inequality there would not, perhaps, be anything very unreasonable. It is not very unreasonable that the rich should contribute to the public expense, not only in proportion to their revenue, but something more than in that proportion." End quote. That's Adam Smith, the founder of modern free market economics. He advocated progressive taxation. So Thomas Jefferson writes, and I quote, "Another means of silently lessening the inequality of property is to exempt all from taxation below a certain point, and to tax the higher proportions of property in geometrical progression as they rise." End quote. Now, I could go on and I could cite Thomas Paine and other American founding fathers and other market economists to drive this point home, but I digress. I'll move on. The only thing that I'll mention is that Milton Friedman, who you may know as one of the leading proponents of Reaganomics and of free market fundamentalism, Milton Friedman was actually an advocate of progressive taxation schemes. He specifically advocated two different proposals for progressive tax schemes during his career. The first was the Henry George tax scheme, and the second was his own personal proposal, the negative income tax. So progressive taxation has been advocated by people that are not by any means radical leftists. It has been advocated by people who are libertarians. It has been advocated by people who are more centrist in their political views. Something that I wanted to talk about is when are tax cuts appropriate? And I would suggest that in order to ensure that the economy grows and does well, we do need to cut corporate income taxes. As of 2015, every single country on the Nordic model of social democracy had a lower corporate tax rate than the United States. Furthermore, every single Nordic model social democratic nation also had no minimum wage at all. Strictly speaking, such social democratic countries have a far more free market system than the United States does. Because they have low corporate taxes and no minimum wage, businesses do quite well. They have a more robust free market system than the United States does. So these Nordic economies are relatively prosperous. They're some of the best economies in the world. Furthermore, their system of progressive income tax incentivizes corporations to raise wages as productivity and profits increase. And that's why Nordic model countries can have no minimum wage at all and yet still have high wages in general. Tax cuts do spur economic growth, but they have to be targeted tax cuts. You have to target tax cuts to productive areas. Cutting taxes on non-productive activities like speculative investment in land is essentially destructive and does not spur economic growth. But cutting corporate income tax rates does spur economic growth. Cutting taxes on top marginal income tax rates in general does not spur economic growth, but merely alters the trend of distribution of wealth within society. Cutting the tax rate on top tax brackets just results in more money going to people at the top and less money going to people in the working class. In the 1950s, we had a top marginal tax rate of 91% under Eisenhower. This is why the booming 50s is remembered as one of the great eras of economic prosperity in America. In the 1970s, they cut the top tax rate drastically. They reduced it by 20%. And by 1985, the top tax rate had been reduced to 50%. And it is currently just below 40%. Since they started cutting the top marginal tax rate in the 1970s, average wages in real terms, adjusted for inflation, have not increased at all. In fact, wages are lower today than they were in the 1970s. And that's wages adjusted for inflation, of course. At the same time, economic growth and profits have grown drastically. So what we have seen is GDP increased, profits increased, but the wages of the workers who produce all the wealth did not increase at all. From 1979 to 2018, GDP increased by roughly 690%. Meanwhile, real wages for working Americans, the people who produce all the wealth and are responsible for that economic growth, the wages remained stagnant. All that new wealth went to the top 1%. In 1965, the average CEO earned roughly 20 times as much as the average worker. Now, with lower marginal tax rates, the CEO to average worker income ratio has increased by somewhere between 900 and 1300%. As workers have busted their asses and made our nation more prosperous, CEOs and others at the top have confiscated all the new wealth and that was generated, and they have ensured that the working class doesn't reap any of the rewards for the increased productivity that happened as a result of their labor. The reason the economy is not doing well is because marginal tax rates on the highest earners is relatively low, which incentivizes CEOs to increase their own wages rather than increasing their employees' wages. The economy is in recession because of low aggregate demand. The worker can't afford to spend as much money, so consumption falls, which means that the companies that are selling stuff are making less money. Decreased spending can even cause profits to go down, which may encourage companies to lay off workers and leave more people with less money to spend. And this can set off what John Maynard Keynes called a deflationary spiral, where the shitty economy creates a negative feedback loop and signals producers to behave in ways that ensure that the economy doesn't naturally recover from the recession. By making the top marginal income tax rate so high that it is more or less prohibitory, you incentivize CEOs to allocate additional company income that results from increased productivity to higher wages for their employees. They won't take they won't take the new money to line their own pockets if it will get taxed at 91%. Instead, they'll give it to their employees, hoping that the wage increases will spur additional productivity and increase profits for the company. When you cut the top marginal tax rate, it encourages the CEOs to line their own pockets with the new company profits rather than share the new wealth with their workers. Not only does progressive taxation make everyone better off, it is also inherently more fair because it more equally distributes the burden of taxation. For most countries, a flat tax rate that is high enough to generate sufficient revenue is far too high for poor people to pay. The tax burden would be too heavy for poor people to survive with. Consequently, serious flat tax proposals like the Fair Tax Plan have all been modified along progressive lines. The fair tax includes a prebate aspect, reminiscent of Milton Friedman's negative income tax scheme, which makes the flat tax bearable by lowering the effective tax rate on the poor and shifting the tax burden upwards. That is to say, the fair tax scheme works by secretly turning the flat tax into a progressive tax. Now, the fair tax plan is a consumption tax, but in principle, it's the same scenario as it would be with an income tax. Poor people live paycheck to paycheck. Actually, the average person lives paycheck to paycheck. Most people do. And they spend nearly their whole income each year without saving anything. The amount they earn and the amount they spend is roughly the same. So a consumption tax and an income tax are basically the same from the perspective of the average person. They earn and spend roughly the same amount in a year. A flat rate consumption tax that is high enough to fund government would be too high for poor people to live with. All serious flat tax proposals have had to compromise in ways that render them more progressive because a flat tax simply can't fund government without taxing poor people out of house and home. Let's imagine that our nation is at war because a foreign nation is trying to take over and colonize us. In order to generate enough revenue to fund the war effort, the government has to charge a 50% flat tax on all incomes. If you earn $10,000, you pay $5,000 in taxes. If you earn $1 million, you pay $500,000 in taxes. Now, suppose that the $5,000 left of the $10,000 income is not sufficient for people to live on. The government decides that it must cut the tax rate for the poor in order for poor people to be able to afford food and shelter. So they cut the bottom tax rate to 10%, giving them a more manageable tax burden of just $1,000 per year on their $10,000 income. But the government has to find a way to make up for the lost revenue. So they raise the tax rate for the person who earns $1 million per year, and they raise it by just 1%. That's all the tax increase they need, 1%. Now, under this new arrangement, there is a progressive tax, or to use the terminology of Hilaire Belloc, a differential tax, where the person making $1 million a year pays 51%, and the person making $10,000 a year owes just 25%. The poor person now has a fair and manageable burden, while the millionaire sees a $10,000 tax increase. For the millionaire, $10,000 is not as much as $1,000 is for a poor person. There's two things that happen here. First, the tax burden becomes more equally distributed. Second, the amount of revenue generated increases. The 1% increase in the tax rate on the $1 million income generates more revenue than a 50% rate increase on the $10,000 income would, and it does this without having anywhere near the same amount of burden on the person that has to pay it. The economist Amartya Sen used this as an argument for why progressive taxation is inherently just. So, all governments have imposed some form of progressive taxation for a reason. Flat taxes just don't work. They can't generate enough revenue without totally ruining the lives of the people at the bottom. So all government has had to resort to progressive taxation in order to generate sufficient revenue. You can't have a stable political system if you can't fund your military. And you can't fund your military with a flat tax without taxing the poor out of house and home. And you can't tax the poor out of house and home without unintentionally causing them to riot and start a revolution. Thus, progressive taxation is absolutely required in order to maintain and preserve any system of government. This is why every government on earth has progressive taxation. Even in America, where the wealthy own the politicians, we have progressive taxation. The wealthy would like to have less of a tax burden, and the wealthy have near absolute control of the American state. Yet, we have progressive taxation anyways, because there is no alternative that actually works. So the wealthy have all this money to lobby the government, and they contribute to politicians' campaigns, and they give money to politicians in order to get the politicians to implement policies that they like. Nevertheless, we still have a progressive income tax system. And the reason we still have a progressive income tax system is because nothing else works. It's impossible to do anything other than a progressive tax. Okay, well, what about the estate tax? This is something I've heard a lot of conservatives complain about. This is that dreaded death tax that Fox News complains about. I've heard conservatives rail against this death tax, and they argue that the estate tax is entirely unreasonable. But it's really not. If my parents saved 100% of their income for the rest of their lives and left it all to me when they passed away, the taxes I'd owe on the estate would be $0. In fact, if all of my immediate family, plus all of my aunts, uncles, and cousins, died today and each of them left me 100% of everything they have, I would still not owe 1 cent in taxes on this inheritance. The current estate tax exemption is $11.2 million. This means that you pay no federal taxes on inheritance unless the estate is over $11.2 million, or unless you have already received $11.2 million in taxable gifts previously. Furthermore, the estate tax is a marginal tax rate of 16.5%. That's not very big. This means that if I inherit an estate of $11,200,001, I would only owe 16 cents in taxes. It's true that Trump's tax cuts increased the estate tax exemptions, but the estate tax exemption has always been really high, even under the most progressive presidents. Under Obama, you had to inherit over $5.4 million before your inheritance would be taxed at all. The bottom line is that the American right wing is completely ignorant when it comes to taxes and economics. They have no fucking clue what they are talking about. These conservative and libertarian economic policies that revolve around cutting the top marginal tax rates, they're completely idiotic. And the only reason that anyone in America votes Republican is because a large part of the American population is uninformed about these matters. We need to raise the top marginal tax rate to somewhere between 70 and 90%. We need to cut corporate taxes drastically, eventually cut corporate income tax entirely even. And we need to abolish the minimum wage. This would result in a more prosperous economy with high wages, low unemployment, and prosperity for all.